It's our discussion segment on today's show. And this time we'll be taking a deep dive into the proposed tax reform bills. There are four of them that have been submitted to the National Assembly by the President. We are looking at the contentious issue of Nigerian tax reforms. The National Assembly is currently reviewing four executive bills aimed at transforming and modernizing Nigerian tax landscape. These bills propose significant changes to the country's tax laws, including eliminating multiple taxation, simplifying tax obligations, and harmonizing tax administration across federal, state, and local jurisdictions. The four tax reform bills include the Tax Administration Bill, seeking to simplify tax obligation for businesses and individuals nationwide, the Nigerian Tax Administration Bill, proposing new rules governing the administration of all taxes in the country, the Nigeria Revenue Service Establishment Bill, which aims to rename the Federal Inland Revenue Service to better reflect its mandate as a revenue agency for the entire federation, and the Joint Revenue Board Establishment Bill, which proposes the creation of a Joint Revenue Board to replace the Joint Tax Board, covering federal, states, authorities. The proposed reforms have sparked intense debate, with some stakeholders expressing concern about the potential impact on businesses and individuals. Recently, the governors of 19 other states opposed the new derivation-based model for value-added tax and distribution. Joining me today is the president of the Chartered Institute of Taxation, Mr. Samuel Agbeluyi, who will dissect the issues and challenges surrounding Nigeria's tax reform saga. We will also explore the potentials or the potential benefit and drawbacks of these reforms and what they mean for the country and the future of our economy. Mr. Samuel, it's a pleasure to have you join us this morning.
Good morning. It's my pleasure to join you.
Good morning, Mr. Samuel. Can you hear me, please?
I can hear you clearly. I hope you can hear me.
All right. It's good to have you join us in this segment of the show again to throw more lights around, especially some of the controversies or issues or questions that have arisen, from this recent proposition, especially as it has to do with the value-added tax. As an introductory remark, can you give us a sense of what you think the concerns of the 19 state government? Can you hear me, sir?
I can hear you. Loud and clear.
I would want you to speak to the concerns that were raised by the 19 northern governors with regards to the proposition made in the new amendments surrounding the value-added tax.
Okay, thank you. Good morning, viewers. I will start by making some general statements, and the general statement will border on the whole idea behind the economic stabilization bill, which is overdue. We need to do a lot of things around our tax system, the tax space. We need to bring sanity into that space generally. And as an institute, that is a Chartered Institute of Taxation of Nigeria, we've been talking about this for years, because we realize that Nigerians cannot grow without revenue that we finance the public expenditure. And when you look at revenue world over, particularly developed and civilized country, they have relied mostly on tax revenue. And to that extent, we believe Nigeria can do better than we are doing now if we harmonize and do sanitize our tax system. So this bill speaks to that fact, to harmonize the tax system. And there are a lot of benefits which I can go into in the course of this interview or interaction. But I appreciate the issues raised by the 19 state northern governors. The and that is the beauty for me in my personal capacity, and even for us as an institute. What we are seeing is the beauty of democracy. Everybody must come with his perspective for proper discussion. This is the B or the Bs are significant enough to bring about the kind of discussion we're having around it. And I believe it's a positive one. If I may go into the concerns of the northern governors, I mean, it is within their right to want to see how the proposed bill will make their situation better and not worse. And I think that is what the nation is handling now, and that is not a bad deal at all. If you are bringing something to the table, we need to discuss it, look at the benefits, and specifically the sharing. If I've been getting on, for example, as at 2024, and let's also agree that by 2025, the bill will become an act and will become operational. What will be, will I be getting 100 plus X or 100 minus S? That is a critical question. I think both parties, if I can use that phrase, will be ready to dialogue on this, and the best way out for the nation will be achieved. I give an example, just two examples. Many people will agree that Governor Sulu of Borno State is highly respected, and he made a plea recently. President Tinubu should look into this so that the state will not be worse off. And I will also make reference to President Tinubu's comment, I think in the past 24 hours, where he alluded to the fact that the nation cannot grow if everybody is not growing. So it means everybody is saying the same thing, probably using different sentences and phrases. So to that extent, I strongly believe that we need to dialogue, and it's a positive dialogue. So there's nothing unusual or untoward if people are asking questions about a proposal. That's the way I see it.
Is the current system broken? You know, the current sharing VAT formula. What is wrong with it that this proposition that gives birth to this proposition that seems to be generating the tension? Because the question really is, if it's not broken, why fix it?
Okay, let me just address a particular part. You will remember some years ago, Governor Wike went to the court to get judgment concerning the VAT, and he wanted the state to collect VAT. That issue had been in court, and I don't think anybody was ready to pursue it further. Now, why that? The agitation of Rivers State and some other states is as to what is gotten from VAT from my state and what I get in return. And in the course of that argument, because we participated very well, the issue of headquarter effect was prominent, whereby and I'll give example, practical example for that matter. Lagos State has a lot of headquarter effect. Most of the banks have their headquarter in Lagos. Most of the conglomerates have their headquarter in Lagos. And that VAT is not about where the headquarter is based, but where it's a consumption tax. So if your headquarter is in Lagos or your headquarter is in Maiduguri, and your products are consumed across the country, so it will be wrong. If I may use your language, it is broken that headquarter effect will give benefit to the state where the headquarters are located. That is not good for the system. That is being addressed in this bill, whereby, and I'll give an example. MTN has its headquarters in Lagos, and so PAT arising from activities with MTN will not be absolutely allocated to Lagos, because people make call in my state, they make call in Kano, people make call in Niger, people make call in Ondo. So the broken aspect of the existing PAT administration we bring about through the new bill, whereby wherever you make call and the infrastructure are there, that is not a problem to be fixed. It's already there. The network entities know where you are making calls. So if you make call in Kano and X amount of money is deducted as VAT from that call in Kano, that should be remitted, whatever portion at the end of the day will be remitted to Kano. Same for other states. So that if I may talk about your question directly, that was one of the things that was broken that is being fixed in this particular bill.
All right. Mr. Samuel, one other concern for most Nigerians who would like to understand the broad context of this bill is that it seeks to increase the tax to GDP ratio, over the next couple of years. And the question for the average Nigerian really is that, are we going to be seeing more taxes? How do we intend to achieve what appeared to be an increase in an economy where businesses and people are suffering? Are we going to see an increase in the number of taxes paid? Are we going to see an increase in the payee? How exactly does this reform intend to achieve this growth in tax to GDP ratio?
Thank you very much. I like discussion around this particular issue you raised. And in all honesty, for over a year, I've had to contend with this question. The question as to increase in tax rate. And I tell you, in August last year, start from May 29, when the president came in, and when he inaugurated the presidential committee, there has been no one or single occasion where increase in tax rate has been mentioned. And I've been confronted with this question everywhere I go. And I follow the social media and I see the same thing. Now, let's dive deep into this. You don't necessarily need to. That is the issue. You don't necessarily need to increase the rate of taxes. One, when you block the loopholes, and nobody can say there is no loopholes in Nigerian tax system. And when we look at the tax system, we are not looking at Federal Inland Revenue Service alone. That's the federal government. We must also pay attention to the state government, because oftentimes we over-concentrate on what is happening at the federal level, whereas we ignore the importance of the state government. The subnationals also need to do a lot, and I say this for subnationals across the country, because personal income tax, which gives the highest tax revenue to the government of South Africa, government of Kenya, and most governments across the world, is within the premise of the state government. So the state government needs to also pay attention. It is disheartening as an institute. We still have some state internal revenue services as we speak today, where you don't have proper structure that can actually guarantee revenue generation. So if you are not prepared for it, how do you get it? So I believe that the state government, the local government, and the federal government needs to work together. And the governments across the tiers, various tiers, also need to improve on infrastructure. Once this is done, you'll be able to bring a lot of people into the tax net. What is the population today of those people paying taxes as against the total population of the country? Very negligible. So we need to bring in more people earning income, not just people not earning income. Bring in more people so that this addition will compensate, because in this current bill, I can tell you for a fact that there has been a kind of reduction of taxes and rates than increase. So where will the government get the shortfall? And the government is not looking at maintaining the status quo. The government is also looking at increasing. And last year, President Bola Ahmed Tinubu was in his statement looking at 18% to GDP tax rate. We are currently around 10%. So if you are looking for more money and you have said you are not going to increase tax rate, and I can allude to that, then it only means that you are going to increase it, you are going to widen the tax net, and you are going to eliminate loopholes, and you are going to introduce efficiency into the way you collect money. That will be done. Let me give you an example.
Yeah.
Sometimes in the country, we throw away the baby with the bathwater. The current governor of Anambra State, Governor Professor Soludo, when he was the governor of CBN, introduced cashless economy. That was a fantastic policy that the government cannot run away from. Even though we've been running away from it, we cannot go further running away from that. Now, Governor Emefiele, when he was in government, also brought about Naira redesign. It's just about semantic. The essence is that let us carry less cash and do more of electronic transfer. That is what is done everywhere in the world. And the moment you do that, you will be bringing a lot of people within the system. You will be formalizing the taxes, the transactions within the country. Once you formalize this, a lot of people will be within the range of government. But not to do that, because of the bad aspect of the implementation of the Naira redesign, not to continue the cashless economy, is throwing away the baby
and the bathwater
with the bathwater, and we cannot afford to do that.
All right.
So once you have a lot of people within the banking system, you will see a lot of activities that the government can capture. I believe we can do 18, we can do 20% to GDP once all these are put in proper perspective.
All right. Just before we let you go, one other question that has been agitating a number of people who have been interfacing with your committee and all of the tax reform is exactly how representative or inclusive, is the process leading to some of these various suggestions. Because some of the criticism we have seen, especially what appears to be like a block criticism or agitation from the northern governors or the northern bloc, sort of suggest that there isn't sufficient representation in the process leading up to this recommendation to allow for a seamless buy-in in what appears to be a positive rather than a negative, as the case may be, from your explanation.
Well, let me make a correction. It's not by committee. It's presidential committee.
Right. Yeah,
as a professional institute charged with tax tax development in the country. I participated actively in that committee, and I tell you, there was consultation before now, but I 100% support for that consultation. There are brilliant people across the country. There are people with noble ideas. So nobody should play King Solomon within this space. I support further deliberation. And I'm happy for the interest this has generated. Some people have not read the bill. Some people did not follow in the course of putting the bill together, because there were a lot of consultations across the geopolitical zone. But apparently it's not enough. And it cannot be enough. We need to carry everybody along. Everybody must believe in it. Because if there is no belief, then implementation may be difficult. And once you have difficulties in implementation, then we are not going anywhere. So I support 100%. Government, we need to spend more money for enlightenment and awareness creation. That
All right. One
I
final
support
question before I
100%. We
let
need
you
to do
go.
that. Nigeria needs to do that.
Yes. One final question before I let you go, Mr. Samuel, is what do you think individuals and businesses should be excited about? Specific provisions they should be excited about in all of these reforms?
There are a lot of things to be excited about. Small and medium scale businesses, you won't pay company income tax, you won't file VAT. That's why I said there are a lot of reductions rather than increase. So you'll be exempted. The threshold before now was 25 million. This bill has increased that to 50 million. So if your turnover in a year is 50 million and below, you won't have headache paying company income tax, you won't have headache paying VAT, as against 25 million before this bill. If you earn 800,000 in a year, as against 360 before. So because the minimum wage has gone up, if you are a wage earner, you won't pay any dime. And because taxation is actually not about revenue collection alone, it's an economic tool for wealth redistribution. So while the low earners will be paying less, the will be paying more. And the essence of that is to collect from those who have gotten prosperity from the country and redistribute, so that the benefit will be for all of us. So there are a lot of benefits that will be arising from this. Capital allowance, purchase of equipment before now was not allowed as input tax for VAT, and that means the cash flow of companies was difficult under the existing regime. But the moment becomes an act, you will be able to claim if you buy equipment of whatever amount, you claim it that year, and not that it will be subjected to cash flow, whereby you will claim over 5 years or thereabout. Because tax payment is reduction of cash flow in any way. So this is also going to help. In fact, this is a major plus for the VAT bill, that people, enterprise business owners, will be able to claim capital expenditure as VAT input VAT. So that is critical. And so there are many other benefits that time may not allow us to go into.
Thank you very much. Thank you very much, Mr. Samuel Agbeluyi, who has been helping us to digest or dissect the issues around the new tax reform bill. He's of the Chartered Institute of Taxation. He's the president of the Chartered Institute of Taxation. Thank you once again for finding time to join us and helping us to understand a bit more clearer and deeper the issues around the proposed tax reforms.
Thank you very much. I appreciate it.
And do have a great day ahead, please.
You too, my brother.